Support for China is slowly but surely growing among Western allies. British Prime Minister Keir Starmer is visiting China for a 3-day trip starting tonight, January 28th, to enhance business connections. A move analysts say reflects China's increasing influence driven by its large economy and dynamic financial markets. Sir Keir Starmer will meet Chinese President Xi Jinping in Beijing. Then he will continue to Shanghai and Japan. Theresa May was the last British Prime Minister to visit China in 2018. Starmer criticized previous conservative governments for their inconsistent approach to China, saying their policies shifted from the golden age to the Ice Age. Sir Keir Starmer believes it is now time to restore effective diplomatic relations, adding that the trip is an opportunity to boost financial benefits for UK citizens and improve national security. Tensions have risen between the US and its longtime allies due to Trump's policies, while China is actively building stronger ties with countries such as Canada and India. China is presenting itself as a dependable trade partner that brings stability. Canadian Prime Minister Mark Carney also recently visited and finalized an economic agreement focused on reducing trade barriers and expanding cooperation. These developments come as other nations, including India and the European Union, are pursuing trade deals outside the US. The UK imports more goods than it exports, but runs a surplus in services, particularly financial and professional services. While the goods deficit is partly offset by this surplus, the UK generally faces a trade deficit with most countries, including China. UK exports also include machinery, vehicles, pharmaceuticals, chemicals, refined petroleum, beverages like Scotch whisky, and high-tech products. It is also a major exporter of services such as banking, insurance, fintech, professional consulting, legal and accounting services, IT and digital solutions, education, and tourism. Common imports to the UK consist of manufactured items like electronics and appliances, vehicles and parts, fuel, food and agricultural goods, chemicals, clothing and business transportation, and also tourism services. China's exports mainly feature electronics, machinery, textiles, steel, and consumer goods, while its imports encompass oil, metals, food, semiconductors, and cars. Although China's services trade is smaller, it includes transport, engineering, and tech services alongside imported travel, intellectual property rights like technology licensing, finance, and professional services. China aims to increase sales of electronics and electric vehicles, while the UK will want China to buy more UK financial services. Notably, China produces 75% of the world's personal computers and 2/3 of mobile phones. Despite geopolitical tensions, global trade remains robust. Healthy demand increases the importance of diverse supply chains capable of handling disruptions, as demonstrated during COVID. Although facing trade friction with the US, China's economy continues to grow, meeting its 5% target for 2025 despite internal challenges such as weak consumer spending and a property market downturn. The US economy is also growing much better than its European allies, but the UK lags behind. In the 3 months ending November 2025, UK real GDP grew by just 0.1%, following a period of stagnation. The services sector saw slight growth, while production output declined, primarily due to setbacks in vehicle manufacturing. Over 60 UK businesses and cultural organizations, including Barclays, AstraZeneca, Jaguar Land Rover, the Royal Shakespeare Company, and Price Waters, PwC, are participating in the UK delegation to China. On the global geopolitical front, China is seizing opportunities created by US tariffs to extend its reach, positioning itself as a more consistent trade partner. In October, China renewed a free trade agreement with ASEAN members, and a 2025 economist poll of 32 countries showed preference for the US as the world's top power had dropped from 59% to 46%, while support for China grew to 33%. Brazil, Canada, and Indonesia showed especially notable shifts, indicating openness to China's outreach and decreasing concerns about coercion. China combines economic initiatives with strong public diplomacy, frequently celebrating investments through high-profile events and media coverage to highlight the value of its ties. Recently, China also received approval for a new super embassy in London. While many governments remain cautious about China's assertiveness and political maneuvers, wariness towards US tactics tempers these concerns. China also excels at creating divisions between countries, sometimes undermining US-led coalitions. For example, Hungary has blocked EU criticisms of China, supported Beijing's Ukraine peace plan, and built security partnerships, all reflecting the appeal of China's market and capital. This leverage can encourage some nations to stay silent on controversial issues such as territorial disputes or human rights. It may even affect global responses to major events like a Taiwan crisis. China's dual use of incentives and pressure encourages other countries to avoid conflict and permits China to act largely unchallenged as the US finds it harder to mobilize international opposition. Still on trade, China's electric vehicles are flooding UK markets. A record 473,300 electric cars were sold in the UK last year, with almost one in every four new cars sold being electric models. Nearly 30% of all EVs sold in the UK are now Chinese made. In 2025, BYD surpassed Tesla as the top global EV seller, delivering 2.25 million battery-powered cars compared to Tesla's 1.64 million. BYD also recently led monthly EV sales in Europe, marking its swift growth. Britain's largest energy supplier, Octopus Energy, supports the inclusion of Chinese technology in the UK's energy sector. Zoysa Northbund, CEO of the company's power generation division, says more competition could cut wind farm construction costs by nearly a third, helping to lower energy bills. In September, Octopus announced plans to use Chinese-made wind turbines for its UK projects. Hello, this is Global Business Insight, where we look at the world from a business perspective and bring you views and analysis that helps to navigate the often turbulent context. Shares of luxury group LVMH dropped over 7% in early trading after the French company revealed mixed full-year results yesterday. Organic revenue rose just 1% in the fourth quarter, matching last year's figure, while overall annual revenue slipped by 1%. Analysts pointed out that investors had hoped for better numbers, especially since competitors like Richemont, Burberry, and Cucinelli showed strong quarterly growth and exceeded expectations. The S&P 500 closed at a record as technology stocks led the index to a fifth straight day of gains ahead of key earnings reports. The S&P 500 was up 0.4%. The Nasdaq was up 0.9%. The Dow Jones Industrial Average, however, fell 0.8%. Today, investors expect the Federal Reserve Federal Open Market Committee to keep rates unchanged at its meeting, but the upcoming pick for a new Fed chairman is bigger news right now. Wall Street will pay close attention to the FOMC statement and tune into what Jerome Powell signals about elevated inflation and a softening labor market. After the close today, major tech firms, including Meta Platforms, Microsoft, and Tesla, will report results. Apple will follow tomorrow. Still, in the US, investors are betting the Trump administration will run the economy hot ahead of midterm elections, with buoyant stocks and the weaker dollar expected to reflect strong growth and rising inflation. Robust economic data has defied predictions of a slowdown in the US, helping stocks hit fresh record highs this month. Several leading African economies such as Egypt, Nigeria, and Kenya are likely to lower interest rates at their initial policy meetings of the year as inflation cools, but central banks are expected to proceed with caution as easing cycles draw to a close. At least 11 other countries, including South Africa and Mozambique, will also set interest rates this month, though the direction policymakers take in these nations remains uncertain. According to EY Africa's Angelica Goliger, that's the chief economist, noting that with global growth forecasted to slow to around 3.1% this year and varying monetary policies across advanced markets, African leaders must carefully balance the opportunity for easing with ongoing external vulnerabilities. And Moody's Ratings upgraded its assessment of Kenya's debt, citing a reduced risk of default in the near term. The rating was raised to B3, still 6 notches below investment grade from CAA1. The outlook was, however, downgraded to stable from positive. This comes as Kenya prepares another Eurobond sale with plans to raise as much as $2 billion. Moody's reports that Kenya has boosted its forex reserves, lowered its current account deficit, stabilized its currency, and used foreign bond proceeds to extend debt maturity. Domestic markets have also supported budget borrowing, cutting dependence on external finance. Fitch Ratings last week also held its rating for Kenya at B- with a stable outlook. Still on risk ratings in Africa, and in a somewhat unusual development, African Export-Import Bank officially terminated its credit rating relationship with Fitch last week. This decision followed a review of the relationship and its firm belief that the credit rating exercise no longer reflects a good understanding of the bank's establishment agreement, its mission, and its mandate. Oil futures gain as the US military buildup in the Middle East keeps concerns of possible action against Iran in traders' sights. US production losses brought on by Winter Storm Fern are also supportive of prices. Brent crude was over $67 a barrel in early morning trade. Bank of Ghana cuts policy rate 250 basis points to 15.5%. The Bank of Canada today held its policy rate at 2.25%, as widely expected. Also, Amazon just confirmed 16,000 corporate job cuts, completing a plan for about 30,000 since October. And in Asia, South Korea's Kospi hit a second straight day of record highs after US President Donald Trump struck a conciliatory tone on his tariff threat against Seoul. Other Asia-Pacific stocks were mostly higher, tracking Wall Street after the S&P 500 closed at a record high. Also, as analysts await the latest big tech earnings. Well, that's it on this special edition of Global Business Insights. This is Bode Oshosami. Please do not forget to subscribe and hit the notification button. Thanks for watching. Bye-bye.